Facebook live stream viewers. We're so happy you're here with us today. This is Backstage, of course. You're viewing us recording Change It Up Radio with Paula Shaw. And I'm glad you're here because we're going to be talking about something very important today. We're talking about taxes, the dreaded T. Yeah. Cheri Blair will be joining us, and we're going to be talking about the new laws, the new tax laws. So I think it's something everybody needs to know about so they can be properly prepared. So please stick around. She'll be with us a little later in the show. And remember, you're backstage with us, so you're not going to see a perfect production. You're going to see everything that goes on between us, in between segments, and that sort of thing. This is what it is to record a radio show. All right, here we go. Welcome to Change It Up Radio with Paula Shaw. I'm so glad you're here today because we've got important information for you. It's that time of year when everybody is thinking about taxes. If you haven't done them already, you're dreading doing them soon, or you're making your appointment to see your tax person, but we're all thinking about going through our receipts, getting those numbers together, and doing all the things that we have to do as part of doing our tax returns by April 15th. And even though that seems a long way off, I don't know about the rest of you, but it seems like January's here, and before I know it, it's April 13th. And it always comes way too fast. Though fortunately for me, I have an assistant this year who swears we're going to have it all done in February. So I'd say that would be really a treat. I would love it. So I don't know about any of the rest of you. This is one of those times of year where if we tend to procrastinate, this is where it really shows up, right? Because sitting down with a day or two's worth of receipts that you have to go through, I don't know about you guys, but that is not my ideal way to spend a day. Though the weird thing about it is, once you get into it, it kind of reminds me of something Dave Blanchard said on another show of ours. He said, oftentimes we dread things and we keep putting them off and putting them off. And when we finally sit down and do them, you know, like a quarter of the way into it, we're going, this isn't so bad. You know, I think the worst part is our anticipation about it, our thinking about it. But once we sit down and actually start getting things in order and putting the numbers in, I don't know, it kind of gets to be like a puzzle or something that you're putting together. Anyway, Cheri Blair is going to be with us in a little bit, and she will be educating us about the things we need to know to get ready for doing our taxes and getting them properly prepared. And she'll also be talking to us about those new tax laws. So please stay with us. In the meantime now, I want to welcome you once again to Change It Up Radio here with me, Paula Shaw. I'm a life transitions therapist, an author, and a speaker, and as you know, the host of this show. My work is about working with others who are going through life's changes and transitions and maybe having a difficult time with it. That tends to be the people that come to see me in my office, in my private practice. And what I try to do is help them to work through whatever those changes are bringing up. And, you know, that could be a variety of things. It could be anxiety. It could be depression. Could be anger. Could be frustration. There are so many different ways that changes in our lives show up when in our behavior or in how we're experiencing our life. Because we humans love to be comfy. We just love things to be familiar and comfortable and easy. And we all know, and that's why I kind of chuckled when I thought about today, our show today, which I'm calling It's Tax Time. Because you know the old saying, there's the only two sure things in life are death and taxes. Well, I'm going to add to that today. I think the three sure things in life are death, taxes, and change. Like it or not, change is coming. And oftentimes when change comes, the loss that comes with it, because something has to go to make a space for something new, right? Oftentimes the loss that comes with it really turns our lives upside down and creates pain. And when we're going through this pain and the emotions that come with it, oftentimes we really need others. We need to be able to sit down and have a great chat with someone that we care about or that we feel cares about us. And too often that doesn't happen smoothly. You know, one of the reasons that I wrote this book, Saying the Right Thing When You Don't Know What to Say, as we have discussed before, is because too often we don't show up for the people that need us because we feel inadequate or we don't know exactly the right thing to say or do. In our second segment today, we'll be answering some more emails from people who write to me to ask what to do. What do I say in different scenarios? You know, what's the right thing to say or do? It's a tough thing that we all deal with. And one of the things I talk about in the book is that when we do have those meaningful conversations, and people can be dealing with all sorts of situations that are going to create that conversation that I'll just call difficult. So it doesn't mean it's necessarily about death or divorce or something terrible. It could be a discussion about job performance that's not going really well. It could be a discussion about a misunderstanding in a plan that's come up between two people. There are many situations in life where we have to have those tricky conversations, those difficult conversations. And many things are important to sort of have in place if those conversations are going to go well. And, you know, I've talked about the 5 steps of successful, supportive conversations. And one of those steps is having the right mindset. Here's what I really feel is so important about having the right mindset. If you go into a conversation with somebody who's hurting, now remember, there are already challenges because you did not grow up in the same home. You were not raised by the same parents. You may not be in the same culture or even the same part of the country. That creates differences in us, differences in the way we think and what we think is right and what we think is not okay. And one of the most difficult things to do is suspend our judgment, suspend our ideas of right and wrong, and just be present with the person that we're working with, that we're talking to. And this is way trickier than it may sound. For example, if I grew up in a family where I was told drama was not okay, and when life dealt you a tough blow, you just suck it up, take a deep breath, be strong, and carry on. If I have that as my internal belief of how painful experiences should be handled, think about how difficult it would be for me to sit down with a friend who's being hysterical, who's maybe wailing, or who's screaming in anger and pounding on pillows. It's very difficult not to get into a mindset of judgment when somebody is behaving like that, when I clearly have been raised to believe that's not okay. What we do is we get strong, we get quiet. That's what our family believes is the right thing to do. So when you want to sit down and have a conversation with somebody that may need some navigation, or a conversation with somebody who's in pain and you want to be helpful to them, you must suspend your judgment and your idea of what's right, what's wrong, and what they should do or how they should be. I can't tell you the multiple stories I have of people who've come to see me who have been equally wounded by the friends who basically said, time's up. Shouldn't you be over this by now? They've been equally wounded by people's responses to their emotion and their pain as they were by the original thing that happened. So this is important, guys. It's important how we show up. It's important that we just come up with a mindset, that we show up with a mindset of wanting to be supportive, comforting, and helpful. Don't show up thinking you're going to fix them. Don't show up thinking you know how they should be feeling now and what they should be doing. Don't show up with your prefabbed idea of what this other person should do or how they should respond. One of the people in my online class, Saying the Right Thing When You Don't Know What to Say, which we talked about a bit last week, said to me, well, Paula, one of my biggest problems is, when I talk to my employees and I have to have a conversation with them about their work and they're not doing well. He said, I have in my mind this idea of how they should respond, of what they should say, and they don't. And that is really hard for me to handle. What should I do? And I kind of chuckled and said, that is such a human condition, because we all have our ideas of how things should be, how people should act, what they should say. But we have to remember what I said a little earlier. They did not grow up in your home. They were not raised by your parents, your church, your friends, your culture. So let's remember when we go into difficult conversations to just be in a state of acceptance of who this person is and what they're experiencing, and be there for comfort and support and nothing else. All right, we will be back after this break with some emails that we're going to answer from people who want to know about saying the right thing when they don't know what to say. Be right back. Okay, so live stream viewers, I'm just going to be putting my headsets on now because I'll be connecting with Todd, who's in the sound studio.
Yes, I am here.
I hear you, and I think I need to turn you up just a bit.
Or maybe I need to turn myself up a little bit.
That's perfect. Now I hear you very well.
Alrighty.
Okay, so give me a second here, and we will get this rolling. Welcome back to Change It Up Radio with Paula Shaw. We are talking about taxes today and those new tax laws. So be sure and stay with us, because in the next segment, Cheri Blair will be joining us to educate us, to give us some tips, and to give us some wisdom about those new tax laws so we can be sure we're well taken care of. But in this segment right now, we are going to be answering some emails from people who have read or seen my book, Saying the Right Thing When You Don't Know What to Say, and are emailing me to share their dilemma with me and see what I might offer them in terms of help. So my sound producer, Todd, is right there with the emails. And Todd, are we ready to go?
Yes, we are, Paula. The first one reads, Hi, Paula. I saw your recent blog on saying the right thing to grieving children. I'm in a quandary as to whether to bring my children to their grandfather's funeral. Some people say, obviously, yes, and others say it will traumatize them. What do you think? Signed, Marilyn.
Marilyn. Well, first of all, Marilyn, thank you for reading the blog. And I do want to share with others that on paulashaw.com, you will find blogs, and oftentimes we are talking about saying the right thing when you don't know what to say. And you can also hear past shows of Change It Up Radio on the changeitupradio.com website. So those resources are there for you. Also on the Change It Up Radio site, you can find out about being a guest or being a sponsor of this show. Now, on to Marilyn. This is a really great question, and I'm telling you, I have been talking to people about this for as many years as I've been in practice because it is a dilemma. Some people believe that if you take children to a funeral, they'll be traumatized. And I have even worked with clients who were traumatized by being made to go up and see grandma in the casket or see a loved one in the casket. So yes, the potential for traumatizing a child can be there. On the other hand, this is a little human being who probably loved. I wouldn't take a child to a funeral of someone they didn't know. But then, so if they're at the funeral, I'm assuming that it's someone like a grandparent that they loved. Remember, it's just as important for a child to have closure with someone that they loved and to be able to say goodbye as it is for us. And too often that's what happens. We don't get that closure. For some reason, the person may have been hurt in another country, or there may have been a terrible accident and there wasn't anything but maybe not even a memoriam. So there are all kinds of circumstances out there that sometimes make it difficult to have closure. But closure is important. So how I would advise you, Marilyn, is talk to the children ahead of time. See how they feel about going to grandma or grandpa's funeral. See if they seem to be expressing fear around that. And perhaps just a conversation about the realities of what is a funeral for, what happens to people after they die, helping the children understand this is a normal, natural part of life. And to honor someone we loved, which is what we're doing when we have a funeral, to honor that person is a beautiful thing to do. It's a way of commemorating what they gave and what they brought to the planet during their lifetime. So don't rob your children of what might be a very beautiful experience, but I would make sure they understand very thoroughly ahead of time what happens at a funeral. Explain to them why people will be crying, that they might feel sad. Knowledge overcomes fear. So give them the basic knowledge they need. Don't let them walk in having no idea what to expect. And by the same token, if they absolutely say they don't want to be there, that they think it's scary or weird or whatever, then I would honor that request as well. I hope that helps, Marilyn. It's a tough decision, but, talk to your children and listen to your children, and you'll know the right thing to do. All right. Todd, do we have another email?
Yes, we do have another email, Paula. This one reads, "Hi, Paula. What do I say to my new husband who has the attitude that he should be in charge of all of our family finances? He tells me that I shouldn't worry my pretty little head, and I just want to scream. I handled my own finances for years before I was married, and I want to know and have some say in what's going on with our money. How would you suggest I handle this? How do I say and still maintain peace and harmony in my marriage?" And that's from Monique.
Okay, Monique. Oh, that's just such a great question. And I know that I think it's really funny. Only not that the question is funny, but that Cheri Blair, who is our guest that will be on in the next segment, talks all the time about how important it is for women to be involved in the finances, that we need to know what's going on. So, Monique, your request is not out of the ordinary, nor is it unrealistic. It's actually a great request. And Cheri has advised us time and time again to actually sit down and have those conversations with your spouse. Actually, I would suggest having that conversation before you're married so everybody understands ahead of time how the money is going to be handled. So often this is either assumed or it's not discussed. And that really isn't a good thing. It's really important that certain areas of the marriage be very clearly understood. People need to talk about, is there going to be religious training? Do we want children? How do we want those children raised? What are the values we want to instill in our children? What kind of a place do we want to live in? What level of cleanliness or lack thereof can you live with? There are many, many important areas of life that sometimes get brushed under the rug because we're in love and everything's wonderful and he's so wonderful and she's so wonderful. But when you start living together after marriage, now you get into the everyday realities of life. And someone can still be wonderful, but maybe they don't share your value about the level of cleanliness in the house, or in this case, how the money should be handled. So that has to be a sit-down conversation, a negotiation, and you have every right, Monique, to be a part of that picture. Especially today, so many of us are getting married later in life that we've already lived 10 or 15 years as an adult, an independent working adult who has handled their own money. Unfortunately, it is a kind of a tradition in our culture and in many cultures around the world that men handle the finances, because there was a time when they tended to be more educated than women because women didn't have the opportunity. But I would say you're clearly not in alignment with that kind of thinking. You're more of a modern thinker. And I think most women today feel they should be part of the decision-making process. So my suggestion is, don't challenge him. Don't come at this in an angry way. Ask him if he has time to talk. Kind of make an appointment, because too often, ladies, we just start blathering when a man's in the middle of watching sports or watching his favorite show or doing something that's important to him. And because men are single-focused, if they're focused on something else, you're just wasting your breath if you're talking. So wait. Maybe start with, is this a good time for us to talk? And if he says, sure, now you can say, and come from your heart. There's something that just doesn't feel good to me, that's bothering me. And it's the way the situation is with our finances. I always handled my own, and I feel like it would be better if we could work together on this. I want to be part of it. So let's talk and see if we can figure out a way that we can both be involved so we can both feel good about this. Then that way you're not making him wrong for having taken the role that he's taken. And now you've you've sort of set the table for a productive conversation, not an argument, not one where he's immediately going to get defensive because you attacked him. Because remember, he's just doing what he was acculturated to do. In his family, that's probably the way it was. And that doesn't mean it can't be different in your family. But my advice is to really come from your heart. Don't make him wrong, but let him know that it's very important to you, and that you think it's important to the relationship for you to be allowed to be part of these decisions in your marriage. So I hope that helps, Monique. I know when Cheri Blair joins us, she may have something else she wants to add to that, because she's a big proponent of women getting educated about finances so they can make great financial decisions. Oh, and by the way, one more thing, Monique. Cheri has taught us that women tend to outlive men. So we have to know how to handle the finances, because one day we may be handling them without him. All right. In just a few moments, we're going to meet Cheri Blair, who will be joining us in the next segment. We'll be right back. Okay, and the beautiful Cheri Blair, is she with us somewhere here? Yes, she is. All right, live stream viewers, she'll be joining us in just a moment, and we're going to get into talking about taxes. Oh, okay. Well, while we're waiting for Cheri, maybe we can continue that discussion a little teeny bit more about how important it is for women. You know, not only has Cheri informed us that the statistics these days are that women live longer than men, but also they tend to make less money. So they need to be well informed. We need to be well informed, ladies, about what's going on with the money. And and when you pay certain things and what you do, you need to be acquainted with your financial advisor. You need to be at every one of those meetings where the investments are discussed, because the last thing you need is to have all that dumped on you after maybe you've lost your husband and you're grieving, and your mind is on everything else but what to do with the money. So don't rob yourself of that opportunity to be prepared. I know that's one of the things Cheri's talked about many times with us, and she puts on these beautiful events twice a year that we've talked about, where she brings women together, usually in a beautiful setting that involves flowers and great food and sometimes champagne, and then she teaches us. We make beautiful flower arrangements, and then she teaches us these things that are so important to know so that we can be well informed, so we can make good decisions on our own and be part of good decision making with our spouse. So a very, very important thing. Thank you for that question, Monique. I hope you're listening. All right. I think any second now, Cheri will be coming into the studio, so I'm going to scoot over just a little bit here to make room for her. And since she brought a giant-sized bottle of water, I'm stealing hers. Okay. Here she is. Welcome. Yes, Todd takes good care of us. Okay. All right, honey, pop over here and let's do a mic check with you. Hi. Hello. Hi. You look beautiful. How are you? Oh, I'm glad we put you in the orange chair today. Go perfectly with your jacket.
He's got everything going on.
Oh, yeah. Todd takes good care of us.
I appreciate that. Let me make sure I have my...
So live stream viewers, Cheri is about to join me. We'll do a little quick mic check on her.
Your question.
I know. I saw your face.
I said, because he was reading it back there.
Yeah. As I suspected, yep. That last question really got her thinking and got her dander going. One thing I know about Miss Cheri Blair is that she doesn't like to see women in situations where they don't get to be part of the decision making and where they're not informed. And as you know, she is a financial advisor and makes sure that in the couples she works with, the women are always part of the meetings.
Part of the equation, right?
Part of the equation. Yes, ma'am.
Yes.
Hello.
Hey, Paula.
All right. You know what? I'm going to jump up real quick and look through the camera and see if we need you to scoot over a little bit. Oh, okay. I don't need those on anymore. Let's see if we can see you. Say hi to the live stream. Oh,
Hi.
perfect. All right. So, Cheri, put your mic where you're going to have it so that you can be talking to me. And, you know what you need to do. Twist your mic so it's in front of your mouth.
Like this.
Yeah, but bring it up. Yeah. And but if you're going to be, well, we're going to try having you just look at the camera.
Okay.
All right. So let me see if I can see you.
righty.
Slide over a little teeny bit here. So remember last time Todd suggested that I ask you the question and then you speak it into the mic and not look at me so we can hear you better.
Oh, that's right. I
Okay.
appreciate you remembering that too. Thank you, Paula.
Yes. All right. If we're ready, I am doing an extemporaneous bio on you today, since I know you so well.
Okay. All righty.
And the written one never seems to say what I want to say. All right. So we'll open with. We're good. Okay. We'll open with. I'm going to say, it's that time of year. So let's start with. First, we'll ask what people should do to prepare, and then we want to talk about the new tax laws.
Right.
Exactly.
Okay. Exactly.
Perfect.
Yeah.
All right, love. Here we go.
And the impact of the tax.
Yeah. Oh, yeah.
Law
I
from the
want
Job
to
Act.
hear about that. I've been prepping them for quite a while now about. We need to hear about the new tax laws. So I'm excited.
They've gone
that
into
you're-
effect now, and
it
it affects our 2018 taxes
Yeah.
as you file it. Yeah.
right now. Okay. So live stream viewers, here we go.
Check my mind.
He did. Welcome back to Change It Up Radio with Paula Shaw. And as promised, in this segment, Cheri Blair is joining us. And most of you know Cheri because she's been with us for a long time, a sponsor of this show. We love her because she loves women, and her whole mission in life is to educate women about finances so that they can grow beautiful financial futures. She's been doing this for over 27 years. As I mentioned in the last segment, she does these amazing, lovely events twice a year. So we'll have another one coming up in April, probably, right?
It's in April. That's correct,
Isn't it?
Paula. Yeah,
I
very
see.
good.
I knew
very
it.
good.
And I already described to them about the events you do. It's a beautiful combination of putting together flower arrangements, having beautiful food, having Cheri educate us about the things we need to know to be wise investors and to be wise with our money. So without further ado, I introduce Cheri Blair, who I love and who we love at Change It Up Radio. Hi, Cheri.
Hi, Paula. Thank you. That's so sweet.
Well, it's the truth. It's the truth.
Oh, thanks.
So I have already been talking to our listeners and saying, we all know it's that time of year that many of us dread and many of us procrastinate around. But it's here. In fact, it's toward the end of January, so we need to get our act together, right?
Right. Absolutely.
So share with us some things that would be smart for us to be doing right now to get ready for taxes.
Right. Being the end of January, right? As you were pointing out.
You go ahead and talk to them.
Oh, she wants me to talk to you folks. Hi. Instead of to her, because oftentimes people aren't seeing me.
So just for the radio folks, at edification, we live stream this show, as you know. And if we don't speak right into our mics, the live streamers can't hear what we're saying. But we love to look at each other because we're women and we make eye contact when we talk. So this is really hard for us, but we're going to try hard to speak right into the mic so we can look at the camera and they'll hear us.
Right,
darling.
right.
Go.
So, yes, now's the tax filing season, okay? So by the end of January, people will have received, if they haven't already, their 1099s, their W-2s,
Right.
All this information. And I've had clients at my office calling since like right after New Year saying, when am I going to get my 1099?
Oh,
and
wow.
And we say, well, we have until the end of January. The companies have until the end of January to do that. So, yes. So,
There, how's that?
yeah. Okay. So, we all know that there was a new tax law, obviously, that went into effect, the Tax Law and Job Act of the 2017, and that eliminated a lot of beneficial deductions and credits. And this law is a mixed bag for many. people and households alike because it increases the standard deduction.
Now, what exactly does that mean?
So the standard deduction, I'm going to go into that, right after this. So I'll talk a little bit more about it.
Perfect.
But the standard deduction is how much you're able to deduct off your income, right?
Oh, okay.
Right. So, but there are more than a dozen, 12 deductions that are now extinct.
Ooh.
And I want to share some of those today
Oh, my goodness.
with you. And I feel and some that I feel that are very important and to be aware of, at least those that the clients of mine are wanting to know about when they come and talk to us.
Okay.
So we're going to start out with the standard deduction. Some of the best news of the tax reform law is the increase in standard deduction. While single taxpayers were eligible for a little over $6,000 to deduct, so $6,350 last year, that amount is almost doubled for 2018.
Wow.
So you can actually deduct for the year, this past year, 2018, off of your taxes, $12,000.
If you have receipts to back that up, right?
Well, yes, you have to, well, no, you're not, that's only if you itemize.
Oh.
So let's just say you want to do standard deduction. You don't
Okay.
want to worry about itemize, you don't want to worry about receipts, anything like that. That's why this is so important.
I see.
Right?
Got it.
Because now we're going to have a choice, and I'll talk a little bit more about that. So if you're married, you can deduct. It's gone up to married filing jointly. The deduction's gone up to $24,000. So that's for 2018. That's up $13,000 from 2017.
And a lot of people probably wouldn't have the itemized deductions that would add up to that. So this is going to be easier
That's right.
for them, right?
That's right. It makes it much easier. She's absolutely right.
Oh, that's good
And
news.
it is good news for many. So, and then now head of households, right? We'll see a bump in their standard deduction from $9,550 to $18,000 for 2018.
Wow.
So in many cases, it's doubled or almost doubled, right? So many folks, going back to what Paula was talking about, might do things differently this year, namely the standard deduction, naming the standard deduction rather than itemizing your tax returns. Why would you do that? Well, obviously, if it's going to be, if the standard deduction is for an individual or a couple, $24,000, and if you itemize at $24,300, that's so nominal, and you don't want to put any red flags to be audited, right? So you might just go. It would be easier to do that, and many people would choose to do that. They say that an estimated 90% of taxpayers will be taking standard deductions, and for 2018 taxes.
Wow. And how does that compare to in the past?
Well, according to the TurboTax, they're saying that it's higher, and they're saying maybe 70% would only take standard deduction.
Oh.
Wow. So because the standard deduction has risen, why would you itemize? Some people say. So itemization might no longer make sense. As far as like you were saying, the receipts.
Yeah.
So a tax filer has two choices: preparing their own returns. They can take the standard deduction that the IRS allows, and they can itemize their deduction, their expenses, and hope that by doing so will give them a number that will exceed the standard deduction.
Got it.
So even if you itemize, it's more complicated, and it may take longer, or so on and so forth.
Oh, it's a nightmare at my house.
Is it?
Well, stacks and stacks of receipts everywhere, and me just going, woe is me.
Right.
It's painful. It truly is.
Well, it's painful. I understand it's painful for a lot of us, and for many. So that in your situation, I mean, obviously it depends on the numbers,
right?
But you have to do the math. So but itemizing can often lead to a higher tax break. So some people, I mean, you have to do the math, and you have to determine that. So
Sure.
That's the first thing. I want to be mindful of our time, Paula.
You're doing beautifully.
Good. So the second one I wanted to talk about was personal exemption. So before 2018, depending on how many people you had or dependents you had, you were taking care of. Now the exemption allows taxpayers to subtract a little over $4,000 for their taxable income for each dependent they claim. So eliminating
That's like your children, right?
right children, if you had a senior parent living with you, even a dependent
I didn't realize
right after college or something like that. Yeah,
I see. Okay,
moving in. I mean,
so that's an automatic $4,000 on top of the maybe $24,000 that you just got as a married couple.
Well, okay, let me just explain. So eliminating it is a significant loss. So it's actually this exemption allowed. No, it's a loss.
Oh, you don't get
no,
that?
no, you don't. So it's a loss. So the exemption allows taxpayers. It did allow them to subtract almost $4,000, a little over $4,000, and for each dependent they claimed.
I see.
So you get this itemized deduction now, right? Standard deduction. So consequently, this could be a significant loss for families.
Oh, yeah.
Yeah. And the increase and this, however, they say because we've increased the standard deduction, it may not
be a wash.
It may soften the blow, but it just depends. That's why I said you have to do the numbers. Another.
Can we pause for just a moment, Cheri? Because I want to ask you more in the next segment. But what preceded and why did they make these changes in the taxes? Is this just arbitrary, or did something happen?
Well, we got a president in.
Oh, that.
And
Really?
and the Congress and the Senate, and they've been wanting to change the tax laws for some time.
Oh, they have. I see.
Mm-hmm.
And this was the year that it happened.
Well, they worked on this from the time that the new president, or the then new president, came in.
I see.
And with the Congress and the Senate, and that passed at the end of 2017.
Oh, I see. So it's implemented now for 2018, which is the taxes we're doing now.
Right. And this goes through all the way till 2025.
Wow. So there's no way it will change till at least then.
It doesn't mean that if there's with change in Congress, change in Senate, change in president, that there can't be changes. But these have been put in place, in effect, till 2025.
Wow.
But it doesn't mean that change can't happen.
I see.
It's just
It's still America.
That's when they would expire. Okay.
Yeah, got it. And we will be talking about what these changes are going to mean and what other changes there are as soon as we come back from this break. We'll be right back. Okay, Todd's going to scold you for not talking into that mic enough. I know it's seductive because you want to look at me and make eye contact. Just try really hard.
Okay.
To look straight.
I'm going to talk to them.
Talk to them.
I'm going to talk to you.
There you go. We're in training here, guys.
There you go.
It's not
there
easy to do.
So I just want to make sure I want to be clear about what we do here. So we're going to have. I want to hit those two are the most important. I'm going to hit this one, and this one, and then I thought I'd just run through the three of these real quick.
Okay.
I think we should have enough time.
All right. Perfect.
Because obviously the standard deduction is the most important.
So shall I lead in with one of these areas, or do we want to? We just finished. We kind of finished our topic about why the changes are happening.
Right.
So where do you want to?
Well, we're going to talk now about what they call the SALT deduction, which is actually the state and local tax deduction.
Okay.
Has been capped at $10,000. That's significant for anybody that lives here in California or particularly in New York.
All right.
So I think that that's really important. That's an important one. Yeah.
All right.
For those of us that live here.
All right.
Particularly.
Here we go. Welcome back to Change It Up Radio with Paula Shaw. In studio with me is Cheri Blair, our sponsor and financial advisor, and we're talking taxes today, guys. Mm-hmm. Those of you who may have just joined us, you missed some of what Cheri has been sharing with us about the changes in the tax laws for 2018. But she's got lots more to share with us. So be sure you catch the show so you get all that information and you're prepared for how to file those taxes this year. All right,
Right,
Cheri. So
right.
what
I
are
just-
some of the other changes?
Well, before I go in there, I just want to say that, because I'm a financial planner, I'm not a CPA, or a tax accountant. So these are things that come up in conversations with my clients,
Yes.
people that we talk about or come in and talk with us. But if there's anything that goes beyond what you're hearing that you have questions for, you might want to check with your accountant or CPA.
Good idea.
I just want to disclose that.
Thank
So,
you. That was great advice.
Yeah.
Yeah. Okay.
But the next one that's gone away that I want to talk about that's very important.
And this is another deduction that's going away?
Yes.
Okay. Got it.
So, it has to do with, it's called the SALT deduction,
Okay.
which means state and local tax deductions. So for those of us that live here in California and New York primarily, which have above state income tax and property tax laws, are going to hit us the most, because there's a cap on that now that you can deduct of only up to $10,000.
So I'm a little confused. So those of us who live in New York and California who have what deduction?
So it's
it's state taxes.
no, it's state and local tax. Yes.
Okay, and we get to deduct that. Is that
Well,
or not now because there's a change.
there's a cap.
but before.
There's a cap on that of
Okay.
There's a cap of $10,000.
Got it.
So before, if you deducted, depending on what your property taxes were, if you had above average, because of incomes are higher in California, New York, those kind of things, you had state tax that were, you could deduct so much from that, or depending on how high it was, and now there's a cap of $10,000
Got it. For everybody?
for everybody,
Okay.
and that's going to impact the middle class the most, and it's going to impact the middle class the most. Yeah.
because they maybe were deducting more than that before?
Absolutely, a lot more, a lot more.
Ooh, that's bad news for them. Then, isn't
Yeah,
it?
no, it's not good at all. No, it's not good. So another one that I want to talk about is it's the $1 million mortgage interest deduction. Okay, that change is disproportionate. That affects also the states like California and New York as well. Okay. Because the amount of mortgage interest, it has to do with the amount of mortgage interest you can deduct. So if you were married last year and you could deduct your mortgage up to $1 million, the interest on your mortgage, okay, in the state, but now there's been a limit put on that you can. It does. Obviously it does. But when you think about it, a house in California, I know a young couple that have three children that just bought a house that's over $1 million, and they did put money obviously down the house, but they go over that $750.
They do. Wow.
And they will not be able to deduct.
But you
Any
couldn't
of the
deduct the
any
whole
of the
thing,
interest over
right?
there.
The interest only is what
Yeah,
you get
you only get to
deduct.
deduct the interest off
Right.
off your mortgage.
I got it.
So let's see where we are in time here.
We're good.
Okay, so there's
5 minutes in.
okay, so there's another one with what they call the unrestricted deduction for home equity loan interest. So the tax laws also eliminate the unlimited interest deduction for both new and existing home equity loans. So I'm sure you know people that take out home equity loans, right? So,
and you used to be able to deduct the interest you were
well,
paying
yes,
on
you
that?
could deduct that if and you could take out a loan, deduct the interest for loans taken out for any purposes such as debt consolidation, or even travel. Now only interest on loans used to make home improvements are eligible for the deduction. So people will sometimes take home mortgage loans out for other things, but they have to, in order to deduct the interest off those loans, they have to apply to your home improvements.
So will this affect people who do the reverse mortgage thing?
That's a good question. That is a good question. And, that is a question that you know that if you are there, because we have clients that are there, I would say it's time to go talk to your advisor, about that, because that is a very important. That's a very important point. Like you were as you brought that up, I thought, oh gosh, we're in the middle of working with clients like that, right now ourselves. The last one I want to share about the deductions here is the alimony deduction.
Oh,
now this is very interesting. Okay, because I know of people in this situation. Okay, couples could set up alimony agreements in the past, prior to the end of 2018, that would allow the person making the payment. So let's just say the husband is making the payment to the wife. You know what's happened so often in the past traditionally, okay? And that would allow that person making the payment to deduct that money from their federal taxes.
right.
So if the husband's making payments, alimony pays to the wife, he's able to deduct those payments.
The total amount.
Yeah,
right? Okay.
That's right.
So let's just round it off and say maybe that's $5,000 a month, so $60,000 a year.
Right.
This person
Right.
could.
Right.
Okay.
It could be 60, it could be 100,000, it
Sure.
could be more.
And what's changing now?
Okay, that won't be an option this year.
None of the alimonies.
You won't be
deductible
able to
from all
deduct.
of it?
No, you won't. No, you will not be able to deduct alimony anymore because it's not taxable to the recipient. So, if the husband's paying alimony to the wife, and he was deducting it, and it was taxable to her, it is no longer taxable to her, and he can't write it off.
This could triple my clientele with men.
There you go.
Oh my God, I can hear them screaming in the streets.
Well,
Wow, that's a big blow
it
for
is
a lot of people.
It is a big one because, since the alimony is no longer considered income to the recipient,
Yeah.
to the woman in that scenario, she cannot deduct any of the legal fees that incurred to get the divorce completed
Oh, wow.
after December 2018. So if she paid legal fees in 2018, she will not be able to deduct them anymore.
Oh, women are going to be screaming in the streets too.
You might have more clients from there too. So, I actually know divorce attorneys that were talking to clients that were actually discussing divorce to get this completed before the end of 2018.
Yeah.
I mean, think about it. If you're paying $60,000 in alimony, and you can deduct that off your federal taxes, and you make $300,000, $250,000, whatever, that's a nice chunk, right?
It is.
And all of a sudden, now you pay $60,000, and you make your income the same, and you can't deduct it. That's going to make a big difference on your tax consequences.
So now, will that take effect next year or this year? If you're filing this year, that starts?
2018. This goes till the end of 2018. So anybody in 2019 that
Oh, I see what you're saying.
Yeah. But it's important to
Wow.
understand. Yeah. So, and then I'd like to just wrap it up if we could. I had a couple things regarding filing taxes. Getting the best return isn't always necessarily how skilled you are, but it's about what you know. So many taxpayers miss out on getting the best deductions or on deductions and credits because they're just not aware. So a couple things I wanted to point out here. If you're not aware, you need to check into.
Only got 1 minute.
Okay,
So let's
and that would
do
be
them
a
quickly.
health savings account. So, there's good tax savings in that. Check into that. Medical expenses, you're still up to 2018. You can do 7.5%. As of next year, it's going back to 10%. So anything that exceeds your gross adjusted income, 7.5% of that, you can use as a deduction as write-off. And last but not least, I want to share is the deduction for business and self-employed. So that would be business-related insurance premiums of any kind, health insurance, dental insurance premiums, and also even you can look into life insurance. Those premiums can be deducted. So that's important, and I know I have a lot of clients that aren't aware of that.
Cheri, you have been amazing today. On point. Shared some good news and some bad news with us, but we're really glad to know it because it'll keep us out of trouble. So thank you again for being with us. I love having you on the show.
Thank you, Paula.
Thank you for all this great
Paula.
information. And thank you to my listeners. Remember, you can hear us here on AM 1170, The Answer, and 96.1 FM, The Answer, on Sunday nights at 9 o'clock. We're on every major podcast platform, including iHeartRadio and Blog Talk Radio. And you can find us on Facebook, Instagram, and please find us and like us and write to us because we want to do shows about the things you care about. So thank you for being with us. We'll see you next week on Change It Up Radio with Paula Shaw. Bye-bye.
Bye-bye.
All right, let me hit the end button.
How about this one, the red one?